Ladies and gentlemen, thank you so much for being here as always. Today we've got a fantastic show for you. We're going to be looking at the cryptocurrency market, specifically Bitcoin and a handful of altcoins, but we're going to be looking specifically at what the whales are doing, these key stakeholders that can move the markets, and we're going to do that by looking at tangible data. So to do that, we've got Brian from Santiment, a fantastic data platform to do just that. So Brian, thanks for being here.
Great to be here, Hishoshi. Appreciate it so much.
Awesome, awesome. And I always appreciate having you on the show to kind of walk us through what the market data is looking like. So if you can, let's just start off right at the top with the main topic of the day. Like, what are the whales up to these days?
Absolutely. So it's interesting what's been going on as of late. I'm going to full screen this just to give you guys a clearer picture. Uh, Really, there's two lines that are dictating where prices go next based on just a key stakeholder perspective. We have Bitcoin here in gold,
Hmm.
and specifically, it's the 100 to 10,000 coin holders.
Hmm.
The reason we like this tier is because 10,000 and above, you tend to start delving into exchange addresses, kind of inactive uh, holding areas where there isn't a lot of fluctuations or changes or reactions to prices. However, we have found that the very largest traders tend to hover in this 100 to 10,000 range. And generally, when they're moving up, markets will follow. And the great thing is there's some legitimate alpha where they will make the moves first and prices will follow shortly after that. It doesn't just happen in real time like many other metrics do, and that includes TA traders, which there are many strategies that are great, but we have rarely found anything with better alpha than what the Bitcoin holders in this tier are doing. And right now, they are showing that it's a mostly continued decline. So some of you may wonder, like, why did we rebound? Why did we pop back up after we went down as low as 33 to 34K just a few weeks ago in late January? Well, the reason is because starting here, right at the beginning of February, these whales started accumulating pretty heavily.
Hmm.
We're looking at supply held right now in terms of percentage. So you'll see at the top left, as I hover my mouse, those numbers will change a little.
Hmm.
They were at the very bottom, around 48.27%, and they peaked just a couple days ago back up at 48.61%. That may not sound like much, but when you're talking about a difference of about 0.34% of all of Bitcoin supply, that's a very massive number.
Hmm.
And we'll show you how big that number was in a moment. Um, but overall, the gold line continuing to go down this long-term decline trajectory
Hmm.
tells us that we would need to see, more of an uptick here in order for us to start getting confident that we'll return to those 50K, 60K, or even all-time high levels that we were at back in November.
Got it. And so does it generally correlate and see you have this purple line as well, which is, Tether, so a stable coin, it's US dollar denominated. Do these sort of generally move in an inverse way to each other as the Bitcoin whales sort of trim positions, they move to USDT or other stable coins?
Yeah, so from what we've found, there's actually a pretty close correlation between what the Bitcoin whales are doing and what the USDT whales are doing.
Hmm.
Now, obviously, it's a pretty wide range that I'm plotting here. It's anywhere between 10,000, which isn't a whale, we'll be honest.
Hmm.
Someone who has $10,000 in USDT is maybe just a high value trader, but not nearly like that top, 1 or 0.5%.
Hmm.
But 10 million certainly is. And the reason we kind of combine them is because at minimum, the $10,000, you know, up to $100,000 holders of USDT, that's still a pretty large chunk that is being held somewhere.
Hmm.
And especially if it's all being held in one address, this can often be one of several addresses that are being held by a whale that has USDT wallets on multiple exchanges or in multiple cold wallets that are kind of getting ready to go for another big uh, purchase at some point. And we found that the two lines actually go surprisingly in tandem, and it was only discovered a couple of weeks ago.
Hmm.
So I'm still learning about just how correlative these two lines are. But overall, when the pink line is going up, you may think it's because people are taking profit from Bitcoin and
Hmm.
just putting it straight into USDT. But generally, from what I see and kind of what I'm speculating, I think a lot of these large whales, when they do take profit, they just take it straight into dollars or whatever their currency is, put it safely in their bank account, and then
Hmm.
reload when they're ready to make a huge purchase once again. That's of course not always the case. Whales are going to act in their own ways, and they're not all just, on conference calls together strategizing, what their plan would be synonymously. But overall, when USDT is going up, like when these large addresses hold more and more of the supply, that's generally going to be a good thing because it implies more buying power. And it doesn't, as you can see, there isn't anywhere close to an inverse correlation. It's much more close to um, a paired correlation where they're moving in tandem together. And I can zoom out to the last year here and prove that a little bit. This is the last year of 100 to 10,000 Bitcoin addresses and 10,000 to 10 million USDT addresses. And you can
Hmm.
see that they've both kind of slid down together. They were
Yeah.
especially correlative here in early August all the way up to early November. And then Tether really slid down as Bitcoin slid down more gradually. But the story, you know, shows even here in May, they go down together and then they kind of bottom out together. And right when the accumulation starts, if you wait, a week or two after, like we did here,
Hmm.
that's when prices eventually pop back up. So right now they're down, but you can see that Tether is starting to creep up a little bit while Bitcoin is creeping down. Um, they kind of wash each other out, in my
Hmm.
opinion. And this would be kind of a neutral signal, maybe slightly bearish because I put a little more credence in the yellow line. But
Right.
together, if Tether is moving up, if the whales are holding a little more Tether and Bitcoin is moving down, it's not the worst thing in the world. What we want to avoid is something like this, like we saw right at the all-time highs or kind of a week or two before it, where Bitcoin whales were taking profit, USDT whales were also liquidating some of their USDT for who knows what, but they certainly didn't want to hold on to their USDT here in early November. So with both of them going down, that was telling us that, maybe there might be one more leg up like there was, but after
Hmm.
that, huge free fall. So if you were taking profit beginning right here in the low 60Ks, I think you
Hmm.
would have been just fine because you would have avoided the huge downfall that occurred right after the all-time high.
Understood. Yeah, it's really interesting to see this type of stuff, and I was asking you that leading question about USDT because I think it's a common misconception that when whales are going to take profits, and even big traders in some cases, they're not always moving direct to a stable coin. They might move to a bank account, which is not necessarily represented in data like this very clearly all the time. And so it's very interesting to know that's what you're seeing as well in the data, that there may not be a guarantee that whales move to USDT to take profit.
Yeah, I think there is definitely a correlation between traders with high value portfolios being on exchanges and keeping a large chunk on exchanges
Hmm.
uh, versus the low ones. I think, people with $100 to $1,000 or even $10 to $1,000 on exchanges,
Hmm.
they kind of shrug it off and go, I'm just going to keep it here. And if something happens to, this obscure or even commonly used exchange, no big deal. But if you've got millions or hundreds of thousands on an exchange, you're more likely to say, I don't want to keep it here. I'm just going to put it in my bank account for now or in a cold
Hmm.
wallet at minimum. So I think there's definitely evidence to point to that.
So my last question for you on this chart, Brian, is if we're looking at like the outlook for 2022, I think I would say most people right now are net bearish about what the markets look like. There are obviously bullish scenarios that could come up. I've talked about some of those cases on my channel. Like, what are you looking for to indicate even modest runs back up towards all-time highs? Maybe not getting there, but towards that direction.
Yeah, so you mentioned the net negative sentiment. We can actually take a look at that really quick because we have an
Hmm.
exact metric that shows just how bearish or bullish people are.
Hmm.
What this is called is our weighted sentiment metric, and it essentially measures the total volume, social volume of mentions of Bitcoin. Of course, I still have Tether highlighted, so let me switch it. BTC, there we go. So it's multiplying the amount of mentions of Bitcoin on Twitter, Reddit, Telegram, Discord, and pro traders chats that are public and we
Hmm.
have access to scrape data on. And then it is multiplying that by the positive versus negative uh, ratio of sentiment. So we have a proprietary algorithm that'll actually measure when someone is commenting on Bitcoin with a bullish bias or a bearish bias or more of a neutral bias. And we actually
Hmm.
put every single comment on a scale of 0 to 100, with 50 being neutral, 100 being bullish, and 0 being bearish, to figure out just how euphoric or greedy people are over time. And just
Hmm.
as you would expect, people tend to be most greedy when we're about to hit all-time highs or we're just
Hmm.
on this mammoth bull run like we were in late September all the way to early November here. And then they tend to get fearful when you see these big dips like we saw in May. And even going into the beginning of last year, there was a lot of bearishness at the time. I can
Hmm.
smooth this out to a week to make it a little more clear. But you can clearly see, there was a big bullish bias here, even though in mid-May things were free falling, and
Hmm.
everyone was saying, we haven't seen any dips in a long time. Um, this probably isn't going to be a big dip. So everyone was kind of defiant and buying the dip and saying nothing to worry
Hmm.
about here. And then eventually, after this leg down here in mid-June, everyone suddenly capitulated and said, no, you know what? Maybe Bitcoin isn't worth anything and it's going to go back to 10,000 or below. And when everyone
Hmm.
got super freaked out, that's when we had the big push up again. And eventually, of course, euphoria here, fear here. And now, after this leg up again, look at how the last couple of weeks here in February, people are starting to get a little euphoric again, which is surprising because just like you,
Hmm.
Hishoshi, I've seen a ton of negative comments and people saying,
Yeah.
I think Bitcoin's going to drop below 30K at least, and then I'll scoop up more. Um, this tells us otherwise. And with
Hmm.
the totality of data we're able to scrape, we're actually still seeing a nice positive bias for at least the last couple of weeks here, which we would want to see cool down looking at this
Hmm.
chart because as we've seen historically, with euphoria and people getting a bit too hyped, that's usually the time you want to bow out or at least start taking some profit. And you want to wait until
Hmm.
things start getting fearful and fuddy like it was back here in January.
It's very interesting, especially given the fact that I think that we've had a baseline, and the reality is it's relative, right? With all the negativity around macroeconomic conditions, like rate hikes within the Federal Reserve, you have potential global conflict in Eastern Europe. You have all this stuff going on, and so I think that even these modest reversals of trend and you see positive price movement might send people more quickly into that euphoric sentiment.
Absolutely.
So it's really interesting to sort of balance that against the news and what's going on in the world to kind of see on a relative basis what that sentiment looks like.
100%. Yeah, and you mentioned how the Fed is impacting all markets right now, and that seems a little
Hmm.
counterintuitive to crypto because crypto is supposed to be the
Yeah.
anti-government currency, but with more and more retail investors and traditional investors coming over to crypto because they noticed the kind of 2021 that we just saw. Um, there is a big correlation right now, and as the S&P is going up and down, crypto is moving in a similar direction right now, often in
Hmm.
much bigger percent swings as you would expect. But with the S&P having a nice rebound day yesterday, crypto was able to surge. Um, it had a pullback at the end of last week because the S&P also pulled back at the end of last week. So we're actually waiting for there to be a little less correlation between what's going on in other markets right now and crypto because crypto tends to thrive
Hmm.
the most when it is acting completely independently, no inverse correlation, no similar correlation, just no correlation. That's usually the ideal setup.
Do you think we're going to get back to that type of setup in 2022? Do you think we'll have another opportunity at some positive price action?
Yeah, I do. And this is, of course, my personal opinion. It goes
Right.
without saying, not investment advice, but I do believe that um, as pandemic fears die down, which knock on wood, we all hope eventually happens this year, um,
Hmm.
that will be a key cog to crypto being able to break out or at least break away from the correlation it's seeing with the S&P. Obviously, there's a big likely almost certainty of a rate hike in March for US stock markets,
Hmm.
and that's going to have an impact. Um, I think the initial week when that happens, seeing how crypto reacts to it will be a big
Hmm.
tell in how the rest of the year goes. So I think, stay tuned for what the Fed says in early to mid March, whenever that announcement goes
Hmm.
down, and react to how markets, crypto markets begin to fluctuate, and you'll have a lot of information along with what the whales are doing. They like I
Hmm.
showed on the last chart, that might just lead the way more than anything.
Very interesting. Very interesting. Yeah, I think right now it's, everyone's wondering, are the at least is at least one rate hike already priced in? When that happens, I think we're going to get that answer. It's hard to say whether that's true,
Mhm.
but I think looking and you're already getting there, Brian. But looking at sort of the whales in a more close lens across time is very interesting. So I mean, let's head over to this chart.
Yeah, absolutely. And I know we're probably coming up on time, so I'll keep it brief. But what we have here is essentially a different perspective of what we just looked at for the Bitcoin and
Hmm.
Tether whales, but spread across around 40 different assets.
Hmm.
This type is probably pretty small. Let me see if I can make it just a little bigger for you guys. Essentially, what this is showing is the percent changes over the last 90 days in purple, 7 days
Hmm.
blue, and 1 day in yellow, the percent change in what their holdings have been within range. So let's say I'm just making up a number here for the purpose of time. Let's say Decentraland whales hold anywhere between 60 to 70% of uh,
Hmm.
the total supply over the last 3 months. So this
Right.
69.4% is showing how close it is to that top range over the last 3 months. So 70%, it's getting kind of in the weeds, but it's closer to that 70% mark than the 60% mark right now. And the higher up you go
Hmm.
on these purple lines here, the 90-day holders, that's how close that's how close it is to its 3 month high in how much they have been
Right.
holding. So high purple bars mean they're accumulating a lot. Low purple bars mean they are not, and they're close to their bottom range over the last 3 months. And then if you're looking more
Right.
short term, yellow and blue, you can see Matic here just in the last day. Whales have been taking a lot of profit, which makes sense because Matic was
Hmm.
surging pretty heavily the last 24 to 48 hours, even more so in the last
Hmm.
7 days. So generally, it looks like so Shiba is a little bit deceptive. You can see it at the top. It's still such a young
Yeah.
coin that I wouldn't put too much credence in that. But Uniswap, that's probably legitimate. It looks like they just hit a 3 month high, which is why it's showing at
Hmm.
100% right now. KuCoin shares, Huobi, a couple exchange tokens there. We can see UMA is really high at the moment, banned. Bitcoin Cash, interestingly, Fetch, Sushi,
Hmm.
0x. Most of these assets are going to be ERC20s. So if you're wondering where Cardano or Solana
Right.
is, we don't have the full whale data on them yet, but we're working on it for sure. We know the demand is there. But
Yep.
this kind of model is really helpful. Besides the coins I named, if you guys would like to just check in on it on a daily basis or a weekly basis to help you with your trading strategies, you can have a free 1 week trial with Santiment and get instant access to models
Hmm.
like these. And we'll drop some links in the description of this video here. But I thought this would be super interesting just from more of a macro perspective. If you're into altcoin trading, you
Right.
can get a lot of nice alpha from a model like this.
Absolutely. Seeing where the whales are trend wise in terms of how much they're holding relative to supply is really interesting and maybe a good indicator when you're at that peak. When you're at the peak, things generally can only go down from there,
Yeah.
right? Of course, there needs to be precipitating events. So it's really interesting using data to work and invest and make a plan in the market. In my opinion, is the best way to do this. You can constantly adjust your plan as needed. And so, like Brian said, links to Santiment will be in the description. Great tool for folks to use to get some of this data and make those decisions. Most of all, Brian, thanks so much for sharing your insights here.
Thank you. Always a pleasure. Good catching up with you, and I'm looking forward to many more here in the future.
Most definitely. You'll be seeing more of Brian on the channel, folks. So please give us your suggestions of what data, what analysis that you'd like to see. And most of all, thank you so much for watching. And until next time, cheers.